Thanks, Nicholas. I'm just still getting used to that kind of veteran thing. Yeah, but I've been at it for 30 years. Hopefully I know what a good project looks like. What you can see, just so you know, is that's our production in the Vienna Basin. That's about 70 kilometres out of Vienna. You wouldn't normally see donkey pumps in that sort of environment. What you see behind you is a nice wine-growing district. We own a lot of the land, and this field was actually developed 50 years ago and is still going nice and steady and giving us some good cash flow. So look, for the next 15 minutes, I just want you to think a little bit about projects that create energy rather than consume them. I think, you know, we're in a kind of an investment cycle where everyone's thinking about AI, data centres, crypto, more petrochemicals, because all of this stuff needs petrochemicals. You don't build your wind farms and everything else, or your EVs without petrochemicals. So what all that needs is more energy, and I'm not sure all that energy is actually accounted for in the energy mix that we're considering right now. And I think we're going to actually, some of those pigeons are going to come home to roost. We're already seeing evidence of it in Australia. In Europe, they've been doing it for 20 years, and they recognise gas as actually a transition fuel, something our government would be too embarrassed to say. So they're saying, well, we need gas at least till 2050. Okay, so what are we up to in Europe? Primarily, we're active in Austria right now, and we just picked up some nice exploration acreage in offshore Italy that we're very excited about. Historically, we've also got assets in Romania. So we're in pretty stable locations, good access to infrastructure, and able to license to drill wells pretty quickly. Generally in Austria, it takes us anywhere from 4 to 6 months to license to drill a well. In Australia now, it takes well over 2 years. As Nicholas mentioned, we're producing around 280 barrels a day. Last quarter, we're anywhere from 250 to 300 on average. In Austria, we've got quite a large resource base in Upper Austria that we've been working on for the last 4 years, around 370 odd BCF of gas potential and 30 million barrels of oil potential of prospective resource. The more recent acquisition we've had offshore Italy, we're looking at around 600 BCF of mean resource. So there's some quite big numbers. What does a BCF mean to you? It's about 11 million euro is what a BCF is valued at in the ground. So you can see the potential is pretty large if we can get into it. Importantly, we've got operating capability in all these countries. We're licensed to operate. Some people still value the ability to do things, and I think that's really important for us. It sort of sets us apart from a lot of other smaller companies. And look, a lot of our funding we've been able to do from farm outs. I'm really proud of that because we've got a team that can put together, can generate an opportunity and sell it to third parties. So that also helps, especially when you've got such a small market cap. Now, we hope to fix this by building our production base up. We've got a plan right now to grow organically over the next year or two, but at the same time, developing those really high-impact targets which punters love to get into, and that sort of helps not only to generate to build a business, but also to give you something that actually generates a lot of interest. And I think you need to do both to be successful. If you're just a producer, it's like gold and everything else. Eventually you get to a point where people say, okay, where are you going with this? It's a depleting resource. So you've got to generate new opportunities. And that's why we see, say companies like Santos that are moribund, which have got a bunch of opportunities, but don't actually progress them. So look, our enterprise value is embarrassing. We've got about $7.5 million in the bank. That's going to go into projects early next year. So we've got quite an exciting program to deploy that capital going forward. And to kind of renew that capital, we're also looking at a listing in Oslo. The reason we're going to Oslo is a lot of the investors in Europe say, look, love what you're doing, love where you are. But we just can't invest in a company that we can't trade in during our daylight hours. So an Oslo listing would allow us to trade all over Europe. and it would be a joint listing, but also, I guess you're in a jurisdiction where they kind of understand what you're doing. I mean, we're in their backyard. So we are an anomaly, an ASX-listed company where all our assets are in Europe. So why Austria, why Italy? There's a few really important things. I mean, essentially, what really drives things and drive things quickly, I think, we're here for a good time, not a long time. We sort of focus on the next 2 to 3 years to actually build, if you like, an operating company that's got, if you like, a sizable balance sheet where we can really start to do things. And I think we're doing it as part of the commodity cycle that is quite beneficial for us. But essentially, like the previous speaker said, if you've got data, if you've got historical exploration, historical production, you can learn a lot from that. It probably saves you 2 or 3 years at least in the investment cycle. But then on top of that, you need, friendly jurisdiction. As I said earlier, we can get things done very quickly in Austria. Italy's changed. They've got a big demand for gas, and they're very keen to bring more gas into the system. They import 95% of their gas. 45% of their electricity comes from gas-fired power. So they're in a pretty tough spot. And for that reason, their gas prices are probably 3 times Australia, probably about 6 times the US. But then if you find something or you're developing something, you've got to have access to infrastructure. Both of these places have open access infrastructure. It's very well developed. So no point going and finding something and then finding you're kind of moribund because some big gorilla won't let you into their network. So that's something that's really important for us. And we've been able to achieve that in both of these jurisdictions through the work that we've been doing. Just quickly, and I don't want to be an energy evangelist, but I think what I'd like you to think about is right now we've been projecting, where gas is going to go. We're thinking about in Australia, we're thinking about actually bringing gas back as LNG because we haven't had an energy policy. We need gas. Everywhere needs gas. If you go to Europe now, as I said earlier, gas is a very critical part of their energy mix, even though they've been transitioning, for over 20 years. And I think we're going to see the same thing here. The beauty of gas is you can turn it on and off. You can bring it on really quickly. We're seeing it in the US now with all these new data centres. Obviously, you can go to nuclear, you can go to coal, but all those new projects take forever. Gas, you can put if you've got a gas field, you can get that into production within 6 to 12 months. So that's the beauty of gas, and that's why we really like gas in Europe. I mean, Europe's been, asleep at the wheel for the last 20 years, getting drunk on Russian gas. Mr. Putin woke everybody up, and everyone understands now the NIMBY approach doesn't work because actually you need a few things in life. Food's important, water's important, but also energy's important. And I think we're just starting to realise that. We're certainly realising it in Europe, and I think we're going to realise it in Australia as well. In terms of oil demand, after COVID, oil demand dropped by about 30%. It's slowly building up. Demand is building up, and it's actually starting to build up to the level of actual supply. So we see good things happening in oil for a number of reasons. First of all, there's ever more oil is going into petrochemicals. We're just all of these things that we're contemplating in the future involve more petrochemicals. I think a lot of us, we've just forgotten about the developing world. We keep, we're thinking about EVs and how that's going to displace oil and gas. Yes, it will. But the demand you're going to get from data centres is about 4 or 5 times what we're projecting for EVs. But try to tell the people in Africa, the people in South America that you can't get access to transport, and realistic access to transport is with hydrocarbons. Okay, so what are we doing? We're going to have a busy, period. In Austria, we're a producer. We've developed some really exciting shallow gas prospects that'll give us organic growth. We made a discovery last year that we were interrupted by an environmental challenge that was overturned, so we're going to get back to testing. And then obviously we've got things further out in the offshore Sicily Channel that we're probably 2 years out, but we're developing actually a very large portfolio there of drilling targets in shallow water, shallow drill depths, and we're very, very excited about shooting some more seismic and drilling in that location. So there's a bunch here for us to play for as a combination of increase in production and really high impact stuff, which is obviously going to also invite farmers into our acreage, and that's really important for us. Just to give you a bit of an idea of what our production looks like, on the left-hand side, that's our production in the Vienna Basin. As I said, that's producing at around 200 barrels a day, a nice stable production. On the right-hand side is a discovery we made in 2022. That's producing around 120 barrels a day. We have 70% of that. But the thing to note there is we discovered this thing in January. This is Anshoff Field. We tested it in April, and we were producing by October. It'd be pretty tough to do that in Australia. And the beauty is because we also had, if you like, access arrangements with the nearby operator, where we've actually stepped into their exploration acreage because they've decided to get out of oil and gas. So we not only got access to their infrastructure, we got access to their people, and we also got access to the data. They had about 3,500 square kilometres of 3D data, and that was probably cost them about 100 million euros to acquire, and over 5 or 6 years. We got access to that the day we went in. So within a year, we made an oil discovery, and we were able to tie it in and produce it within 6 months. Now, that facility there will take around 3,000 barrels a day, so we're very highly motivated to continue to explore around it. All right, so that's a map of Upper Austria for those of you who don't know Austria. It's around Salzburg and Linz. Excellent skiing there, but you'd be surprised that there's been an oil and gas business going on there for the last 60, 70 years. We're only the third company ever to actually have a licence in Austria. Previously, it was OMV, the national oil company, and a consortium of Mobil and Shell. All the light red and green that you see there, they're historical fields. The red now has become 10% of Europe's gas storage. So the old model was Gazprom gas would come in, it'd be stored there in summer, and then it would go out to 5 different countries, at about a 50% premium to the summer gas price. Obviously, that model's broken now, so everyone's trying to think, okay, all the gas is having to come in rather than coming out. So that's why anything we can do to find more gas is really important. So what we can do is those maroon-coloured blobs that you see there, and that'll be the program that we've put together for drilling over the next year. And we'll be starting the first one in February. So just kind of watch that. The green on the right-hand side is around the Anshoff field. There's a lot of prospectivity there, about 30 million barrels to tie into an existing facility already producing, and obviously that'll give us good profitability. So these timelines you can go through, but essentially what we're talking about is testing early in the year, commencing of drilling up to 3 wells, shallow gas wells, and then getting into more oil drilling around the Anshoff field in Upper Austria. So what would this do for us? Basically, just success in 2 of those gas prospects. And these gas prospects, most of the things we drill are sort of 20 to 30% chance of success. These things are around 60 to 80% chance of success. So they're very, and it's because we've used a combination of AI, historical data, 3D data. They're very shallow, very easy to access. So the beauty of them is they're close to infrastructure. They cost about 2 million euros to drill. So for investment of 2 million with an 80% chance of success, we get an NPV about 14 or 15 million. So that's pretty exciting. What you see here is all these bright spots are historic gas discoveries. Then you see Hochfeld, Schonfeld and Goldbrunn. They're the 3 things we want to drill. So they're direct analogies to what's already been drilled, what's already been successful, and what we can see is the seismic just lighting up in those areas, and that's why we're very keen to drill these. Now, the first 2 work, we've got 10 more like them. Testing of well chow, we drilled that well last year. We encountered about 450 metres of hydrocarbons. We've tested 1 zone. We're going to go back to testing 2 or 3 more zones, and that'll happen in January. All right, so as I said earlier, what you can see here is the sort of revenue that you would generate from these shallow gas prospects for a 2 million initial investment. discovery, you would generate around 45 million euros of net cash flow. So that's a very nice model to have. Okay, so this is where we are, last 30 seconds, offshore Italy. What you can see is 3 fields around us. The Lipone Mazzara field is an onshore field, another offshore field, which is an ENI field that's just been developed, and then you can see our new permit. They are identical, if you like, assets to what we're planning to drill, and that's what our data is telling us. So, you know, we've got a large prospect inventory. We'll start with a new competent persons report in January, and this is all historic data. We can see the gas on seismic. There's been 20 wells drilled, and we can see the gas in the shallow section of wells that have been drilled historically. So we know the gas is there. We know the reservoirs are there, and these are very shallow, sort of 800 to 1,400 metres, and we're very keen to get out and start drilling those. All right, thank you very much for your time, and keep an eye on some energy.